In an unprecedented economic milestone, China's trade surplus has surged past the $1 trillion mark for the first time in history. This record-breaking figure underscores the nation's formidable export machine and the world's continued reliance on Chinese-made goods. Even as global economic headwinds gather, despite facing a challenging global environment, China's export sector has demonstrated remarkable resilience. Official data reveals that overall exports expanded by a solid 5 to 6% year-on-year. This growth is a testament to the competitiveness of Chinese manufacturing and its ability to adapt to shifting global demands, from consumer electronics to industrial machinery. The Made in China label continues to dominate international markets. However, a closer look at the trade data reveals a more complex and shifting landscape. A significant part of this story is the sharp downturn in shipments to the United States. The ongoing trade tensions and tariffs imposed by Washington have led to a noticeable decline in exports to one of China's traditionally largest markets. This drop highlights the deep-seated friction between the world's two largest economies and the strategic decoupling taking place in certain sectors. Yet, where one door closed, others opened. Chinese exporters successfully pivoted, compensating for the U.S. decline by strengthening trade ties elsewhere. Significant growth was recorded in trade with the European Union, Southeast Asian nations ASEAN, and Australia. These regions have stepped in to fill the gap, showcasing China's strategic diversification of its export destinations and its deepening integration with neighboring economies and other key global players. This shift not only buffered the impact of the U.S. trade dispute, but also reconfigured global supply chains. While the export figures paint a picture of robust strength, the import side of the ledger tells a different story, one of caution and weakness within China's domestic economy. Import growth remained modest, signaling sluggish demand at home. This points to a key challenge for Beijing. Chinese households are spending cautiously, and private businesses are hesitant to make significant new investments. The weakness in imports is a direct reflection of this internal economic drag, particularly the ongoing turmoil in the property sector, which has historically been a primary driver of domestic growth and consumer confidence. Recognizing this imbalance, the Chinese leadership is making a concerted push to reorient the economy. The government has clearly signaled that boosting domestic demand is its top priority heading into 2026. Beijing is rolling out a series of policies aimed at stimulating household consumption, encouraging private business investment, and implementing deeper structural reforms. These measures include potential subsidies for consumers, tax breaks for businesses, and further investment in high-tech infrastructure to foster new sources of growth. The goal is to create a more self-sustaining economic model that is less dependent on external demand. China's colossal trade surplus, while a sign of its export prowess, is not without consequences for the rest of the world. This massive imbalance is likely to amplify concerns among its trading partners about fair competition and market access. A surplus of this magnitude can contribute to global trade imbalances, creating friction and potentially leading to protectionist responses from other nations who see their own industries at a disadvantage. International institutions are watching closely. Organizations like the International Monetary Fund (IMF) have been vocal in their recommendations, urging China to accelerate its transition away from an export-led growth model. The consensus among many global economists is that a more balanced Chinese economy, driven by robust domestic consumption, would not only be more sustainable for China, but would also be a significant benefit to global economic stability. In summary, China stands at a critical juncture. Its record-breaking $1 trillion trade surplus is a powerful symbol of its manufacturing might. But it also casts a sharp light on the urgent need to invigorate its domestic economy. The path forward for Beijing involves a delicate balancing act, maintaining its export competitiveness while successfully cultivating a vibrant, consumption-led domestic market. The success of this economic pivot will not only determine China's own long-term prosperity, but will also have profound implications for the future of global trade and economic order.